All right, so we're going to dedicate this video to triangular patterns. Now, triangle patterns happen quite frequently when it comes to consolidation patterns, and there are three different types of patterns that we're specifically looking for. You have the ascending triangle, the descending triangle, and the symmetrical triangle, all of which we will go over in this video. But a word of caution is that all of these types of patterns are bilateral patterns, which means that they can break out into either direction, and it is really important to wait for confirmation when playing these patterns. And we're going to talk about the confirmation for each direction. So, first pattern that we're going to look at is the ascending triangle pattern. And essentially, an ascending triangle pattern has a flat top, kind of like what we're seeing here, and an uptrending resistance. Notice when I go ahead and draw out this uptrending resistance right here, we have a triangle that has a flat top and an uptrending base, and this is called an ascending triangle due to the fact that the price is ascending within the triangle. There are two directions which this can break out in, whether that be the up direction or to the down direction. And there is a confirmation for both directions. So for the first direction, the confirmation is if there is a candlestick close above this upper trend line, then that is a confirmation for an upside move, and you would look to establish an entry there. And where you would look to set your take profit at is by using the Fibonacci retracement tool, tracking the initial move, aka the first move or going from high to low of the pattern, and taking profit at the 1.414 and 1.618 levels of retracement, which we can see were actually reached here and over here. Now, if say that this did actually not break out to the upside, if it were to have broken out to the downside and broke this lower trend line, where the confirmation occurs is by going from relative low to relative high of the pattern. And confirmation occurs when you get a candlestick close beneath the 0.707 level, and you would take profit at the 1.414 and 1.618 level of retracement, all while setting a stop loss at the high of the pattern. So for triangle patterns specifically, it is very important to wait for those confirmations so that you can understand if it's going to be an upside break or a downside break. Because if you don't wait for the confirmation, then you may get faked out and you might result in quite the loss. But this one did end up breaking to the upside. So how we identified where to go ahead and take profit at is taking a retracement of the initial move from high to low, taking profit at the 1.414 and 1.618. And where you would set your stop loss is just by doing the same thing that we identified earlier to identify the confirmation to the downside. If the confirmation to the downside is with a candlestick close beneath the 0.707 level from low to high of the pattern, you would use that as a stop loss for an entry to the upside. So if you enter with this break above here, set the stop loss at the 0.707, and your take profit would of course be at the 1.414 and 1.618 levels of retracement. All right, let's go ahead and take another look at an example of a ascending triangle. If I go ahead and look here, notice we do have this flat top. We have a nice little flat top right here. And if I go ahead and draw a trend line out, you'll notice that we do get that breakout to the downside this time. That's why I'm saying it is a bilateral pattern, so it can break out to either direction, and it is imperative to wait for confirmation. Notice we did not get any candlestick close above the highs over here. So where we're looking to go ahead and establish that confirmation to the downside this time is by taking a retracement from low to high and waiting for that candlestick close beneath the 0.707 level. Notice we did get that candlestick close beneath the 0.707 level here, and we would set the stop loss at the pattern high and take profit at the 1.414 and the 1.618. So essentially, a good way to think about the stop loss for these patterns is you would set the stop loss where you would enter if it were to have broken out on the other side. So if we're playing this downside move, well, we would have entered with a breakout to the upside, a breaking candlestick close above the highs over here. So we would use that as our stop loss. So our entries with the candlestick close beneath the 0.707, stop loss at the pattern high, and take profit at the 1.414 and 1.618 levels of retracement. Okay, so the next pattern that we are going to be looking at in the triangle pattern series is the descending triangle pattern. Notice if I go ahead here, this is pretty much just going to be an inverted version of the ascending triangle. This time we have a flat bottom and we have a descending top. Now, of course, if you want to go ahead and look for an entry to the downside, you would look for that candlestick close beneath the lows right here or of this lower trend line. if you go ahead and actually see a candlestick close beneath here, you would do the same thing to identify that those price targets by going from low to high of the initial move and taking profit at the 1414 and 1618. However, we did see a breaking close above the upper trend line. So we're going to do the same thing that we would have done for the ascending triangle, but this time on the descending triangle. We're going to go from high over here to the low. And basically, we're waiting for that candlestick close above the 0.707 level. When you get the candlestick close above the 0.707 level, go ahead and take an entry to the upside with a stop loss beneath the pattern low. Where you're taking profit at is at the 1414 and 1618. And those were actually hit in the after hours session here, but it is a bit volatile and there was actually a reversal that occurred down from it. So take profit at the end of the day if you are scalping, especially with a 1 minute chart. That's just kind of a word of advice. Typically not the strongest to hold positions overnight if you are trading the 1 minute chart, just due to the fact that so much can happen in the after hour sessions. And if you were trading, say, something like 30-minute charts or the 1 hour charts, then it is okay to hold something overnight if the play is still actionable. But since you are looking at something on the 1 minute chart here, you would have probably taken profit at the end of the day regardless. Although the price targets were still hit at the 1414 and 1618 in the after hours section. Let's go ahead and take another look at a descending triangle. Notice over here, if I just tack on a quick trend line right here, we have a descending trend level of resistance. And if we look at the base, it is going to be that flat base that we were talking about. And if we were to get a candlestick closed below this flat base, then you would take a downside move with the price target by, of course, looking from the relative low to relative high of this move and taking profit at the 1414 and 1618. However, we got that breakout to the upside, as we could see over here. So you would go ahead and go from the pattern high to the pattern low, establishing entry point when you get a candlestick close above the 0707. When you get a candlestick close there, go ahead and take an entry to the upside, set the stop loss below the pattern low, and essentially you're going to go ahead and ride that up to the 1414 and 1618 levels, which are going to be very strong price targets in general. All right, let's go ahead and talk about the symmetrical triangle. If I go ahead and look here and just draw out this triangle and draw out these trend lines right here, you'll notice that this time we have two trend lines that are converging together, creating that symmetrical triangle, nice little isosceles triangle that we have here. Of course, this is a bilateral pattern. So how are we looking to establish an entry and confirm it? Well, there's going to be, when you're playing this, you're looking for either a break to the upside or to the downside. So what I like to do is take a retracement of the first move. And if we get a candlestick close above the 0.707 on the outside of the triangle move, then I'll go ahead and take an entry to the upside and take profit, of course, at the 1414 and 1618, all while setting a stop loss below the pattern low. Or if we were to go ahead and look at the downside move, what you would do is just take an opposite direction of a retracement. If you get a candlestick close below the 0707 here, then you would take a downside move, setting the stop loss at above the pattern high and taking profit at the 1414 and 1618 level. So typically what I like to do is whenever I see a symmetrical triangle happen, I'll draw out both of the different Fibonacci retracements. And either if we get a break above the 0707 to the upside, then I would take an entry to the upside with price targets at the 1414 and 1618. And if we get a break to the downside beneath this 0707 level, then you establish a short position with price targets at the 1414 and 1618. And since you are using both of these as entry points, you can also use the other as a stop loss if one is to close above or below. So here we see a candlestick close above the 0707. What that means is you could take an entry there and use the other 0707 as a stop loss. You can actually reduce your risk by, instead of using the pattern low, just using this 707. And likewise, the same if this 0.707 was to have broken down and we were to see a close beneath it, then go ahead and take an entry to the downside and set the stop loss at this 0.707. All right, let's look at one more example of a symmetrical triangle right here before we wrap up this video. If I go ahead and just draw some quick trend lines real quick, you'll notice very quickly that once again, we do have that isosceles triangle where it can break out to either direction. So let's go ahead and talk about how you would identify an entry to both sides. If we were to break out to the upside, we'd be looking for that confirmation above the 0.707 here. Likewise, if it were to break out to the downside, we're looking for that confirmation below this 0.707 here. And of course, it did break out to the downside, and we did get that candlestick close below the 0.707 on this candlestick here. So you take an entry to the downside, and you take your profit at the 1414 and 1.618. As you can see, the 1.618 was actually not reached here, which is why we have those two different price targets. If the 1.414 is reached, you're setting your stop loss back to break even, so that even if the position goes ahead and reverses like it did here, you would still profit on half of the position, or how many contracts you ended up selling at this level. You would end up still profiting on them, and everything else would just break even. So entry at the 0.707 to the downside here. If it were to have broken to the upside, you would use this 0.707. But since it broke down here, enter here, stop loss at this 0.707, and take profit at the 1.414 level. But anyway, guys, that is it for this video on triangles. Of course, stay tuned for more videos on consolidation patterns.